PNB will buy Silk Holdings' toll concession assets for 380 million ringgit. A joint press release said that Silk Holdings has entered into a conditional share purchase agreement with PNB to dispose the entire issued and paid-up share capital of Sistem Lingkaran Lebuh Kajang to be paid in cash. Silk intends to allocate up to 200 million ringgit for future investments such as enhancing and strengthening its existing offshore marine support services business. The remaining sum, up to 70 million ringgit, is for distribution to its shareholders, and another 110 million ringgit for general corporate and working capital. As for PNB, the Silk acquisition forms part of its strategy to expand and enhance its existing highway portfolio, which includes Acklay and Guthrie Corridor. This is in line with its objective of enhancing long-term sustainable returns to its unit holders. Before PNB, there were 3 different parties expressing their interest to buy into Silk Highway since 2014, including IJM Corp, Teleworks and WC Satu, all of which fell through. The disposal is expected to be completed by the first quarter of this year. Genting said its wholly owned subsidiaries have successfully priced a $1 billion offering of guaranteed unsecured fixed-rate notes. In a statement, the gaming group said that the funds may be used to finance its Resorts World Las Vegas project as well as general corporate purposes, among others. According to reports, work on the $4 billion resort has started with an eye on a 2019 completion date. This bond issuance represents the group's landmark return to the international US dollar bond markets since 2004. The subsidiaries are Genting Overseas Holdings Limited and Genting Overseas Holdings Limited Capital Limited. In a statement today, Genting said the notes will be fully guaranteed by GOHL, adding that the notes have a keep well deed with the parent company, Genting Berhad. It said the note will be denominated in US dollars and will bear fixed interest rate of 4.25%. Spotlight on 1MDB scandal has shifted to New Zealand following an exclusive report by the New Zealand Herald. The High Court in Auckland is set to hear a request from Jho Low's relatives who have opposed the seizure of assets worth 230 million USD. These assets were alleged by the US Department of Justice to be the proceeds of crime. According to the DOJ, Jho Low's relatives are beneficiaries of a number of New Zealand's trusts, who in turn own a number of assets involved in the 1MDB saga. Such assets include penthouses in Manhattan and a private jet. The Daily reported that the New Zealand connection only came to light few weeks ago when Jho Low's relatives complained in US courts, saying that trustees were not challenging the seizure order. The court filing from their lawyers said they requested that the New Zealand High Court would appoint someone who's willing to take on the DOJ. The US filings noted that some current trustees were worried that if they fail to oppose their replacement, it raises the possibility they might fall foul of US laws criminalizing money laundering. Malaysia's Takaful sector is thriving as compared to the conventional insurance sector. According to Fitch Ratings, Takaful's growth is driven by a low base, stable domestic consumption and an increasing consumer awareness. Though it expects attractive growth prospects, but smaller-scale operators who can't justify the additional regulatory-related costs are most likely to engage in M&A activities. It adds that as Takaful operators realign their strategic focus and gradually retain more risk, the industry will experience some bottom-line volatility in the short term. For the first half of 2016, Family Takaful grew by 9.8%, surpassing growth in conventional life insurance at 8.2%. Meanwhile, General Takaful grew by 5.8%, outrunning the 2.6% growth in general insurance. According to Fitch, General Takaful accounts for 12% of the overall general insurance market. Kwajalein has awarded the development rights of a 21-acre plot of land to Geylang Holdings. The land marked as R31 is located in Kwasa Damansara Township. The proposed development has a GDV of 700 million ringgit, featuring 780 residential units comprising a combination of high-rise towers and villas. In a statement today, Kwajalein said its wholly owned subsidiary Kwasa Development 3 Sendirian Berhad has signed an agreement with Gadang's unit Elegant Sonata Sendirian Berhad for the development rights of R31. Under the deal, Kwajalein will receive 165.5 million ringgit for the development rights and revenue sharing from Gadang. The company said it would take 6 years for the entire project to be completed and that plot of land is expected to be launched by January 2019.